The numbers may seem small, but remember, we are still in COVID. And the interest that we have in Avatar is amazingly high. And this is coming from fleet owners as well as from the drivers themselves because they find the cab is absolutely fantastic. The fleet owners are very excited because the overall fluid efficiency is much superior than competition. When we say fluid efficiency, we're talking about diesel as well as the AdBlue, additive that we need to add. So, we have been very happy and we decided that we will not delay the launch and we will pursue the launch. And of course, the BS6 solution that we have offered again, which is a differentiator, the mid-knock strategy, has also been very, very appreciated by the customers. Customers do buy 1 or 2 vehicles or 10 vehicles or 15 vehicles and then they test the vehicles, and that's a very important feedback that we get. So as we move forward, we have still some aces in our card pack. We will be launching Phoenix. Of course, the name of the vehicle will be different, of course, at the time of launch. It would be anywhere between the next 60 to 90 days that Phoenix will get launched, depending on, the opening up. Again, the feedback that we've had of Phoenix, which is the LCV vehicle, is amazingly positive. Very differentiated vehicle. I cannot share the details with you, but we believe that this is again going to be a game changer. And then I would also want to add that as we are doing this, we are looking at every item of cost. We have saved about over 550 crores last year, 500 to 550 crores last year in what we call as K54. Team had done a wonderful job. And as we've gone forward, we have launched a project called Reset. And there we are looking at a much larger canvas, looking at how do we drive operational efficiency, not just overheads. So we are looking at productivity, we are looking at digital, we are looking at how do we reach out to customers. And also, let me tell you, one of the points I had missed out, the effect of Avatar, being actually sold, through a vehicle, a vehicle configurator, which means it's sold using a pad or a note, and the customer can configure the vehicles, actually improves the supply chain significantly. Because when you have modularity, as we move forward and the volumes start to gain over the next year and a half, you'll actually see that our complexity of manufacturing is reduced, the number of parts we carry is reduced, the inventory that we have is reduced, the number of vendor complexities are reduced, the dealership inventory comes down because you are able to transmit the requirement as efficiently as possible, and the number of SKUs that we have at the back end, in the manufacturing side, will be lower, but the number of offerings that we can give to customers will be significantly higher than what we have been doing in the past or what is offered in the market. So the flexibility that modularity brings in is part of the operational efficiency drive. As we move out of the current financial year, I would say that we would see Ashok Leyland to be a much stronger, resilient, efficient, and financially performing company. The reason I'm stating this is because the investments that we are doing today is really exciting in terms of the efforts that the entire cross-functional teams are putting in. It is not just taking out some cost and doing, some chip chop, but it's much, much larger than that. While I can't share absolute numbers with you, you will see the benefit of all of this coming out in the forthcoming year and the year after that. We did the same thing in K54, if you remember, where we didn't put a number at the beginning of the year, but as the year panned out, we gave visibility as to what the productivity norms are. Exports have been a challenge this quarter. Not too worried about it because the markets are yet to open up. But here again, as we have shared with you in November last, when we had the pleasure of having some of you over to our Villiwal Chavadi Tech Center, we have a completely different suite and a more comprehensive range of products, both LHT and RHT. We are ready to address the requirements of the markets that we currently are in, which is in Middle East and in SAARC. But we are going much beyond that, and we believe that as we move forward, we would also be making forays into Southeast Asia, which is going to be a very important market for us. LCV, like I mentioned to you earlier, the Phoenix launch is going to be an important one for us, and we ourselves are waiting to launch it as efficiently and as quickly as possible. But beyond that, we have seen that the LCV demands are picking up, and believe me, we are in the production in Hosur for LCVs actually ramping up very, very quickly. So that's a important devolatilization strategy that we have embarked on. And aside of that, the parts business again, very, very has been surprising us because the revenues in parts for the last 2-3 months has been clocking over 110 crores a month, which has been very, very good, which actually kind of speaks of the network and the depth of the network that we have. So this is where we are. I think a lot of good things are happening amidst all this, gloom that we see and we read about. But I think our team is doing an exceptional job. The final statement all of you would be also wanting to know is what is the debt in the books. The net debt in the books as of 30th of June is 4,247 crores. So now I'm going to, leave the floor open for questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Participants are also requested to limit their questions to 2 per participant. Time permitting, you may return to the queue for your follow-up questions. The first question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Thanks for taking my question. My first question is, as you rightly said, the volumes were very minuscule in the last 2-3 months, not to be looked over. I just want to understand what is our production plan now, how the ramp-up will happen, let's say starting this month. What is our initial such plan in terms of production per month or let's say a quarter? Why I'm asking this because when we look at the two-wheeler, the PVs, they're all ramping up, or rather they're coming back and ramping up very fast. Is there something, because I understand in the last call you talked about the industry, we should look at from this quarter onwards. So just need your ramp-up comments on the production side first.
Okay, let me put it this way. There is a ramp-up that we need to do. There is a ramp-up that our vendors also need to do. I think what's happening is there are dramatic changes that are happening over as we speak, week on week, day on day. So if you were to look at it, my answer would have been different in April and May, possibly slightly different even in June, tentative, but July seems to have been not bad. August, as I was talking, because we have our reviews quite frequently, what my manufacturing head was mentioning was that, Hosur is actually running pretty full, especially the LCV side. As far as MHCV side is concerned, the demand uptick is definitely there. There's no doubt about it. But I would say that overall, if you look at it, we already are at about 30-35% capacity. All plants are functioning. No plant is shut down. But certain plants are running. See, the other important thing is also to ensure that we're complying with the social distancing norms. So both at Hosur, Ennore, Pantnagar, Alwar, Bandara, we are ensuring that we follow the safety and social distancing norms absolutely, to the T. So that's happening. We are, as we are speaking, we are ramping up month on month. And like I told you, so we have, produced more than 2,000 AVTRs and 3,000 MHCVs and cumulatively 10,000 BS6 vehicles. So I can only tell you that we are also seeing the same ramp up happening in our suppliers, and we're seeing that some of the supply chain constraints, the uncertainty around China supplies, all of that are coming off, and hopefully when the confidence comes in, when the governments also notify that they're going to offer flexibility in ramp up, then we will see the ramping up happening further. I think a lot of demand also depends on how much mobility people have, because when there is a restriction in end user industries, be it steel, cement or chemicals or paper or e-commerce or anything, then what happens, the demand from those segments also are in a tempered way. So they're not really full blown. So when those demand starts to pick up, that immediately translates into demand for freight and exchange of goods and materials. So when that happens again, that translates into a demand for vehicles. So we're seeing that happening. especially in the MHCV side, I'll say that the maximum traction is actually happening in ICV, where we have seen that while there has been degrowth, the volumes predominantly have been there, and the second largest piece has been in tippers. So these two have been coming up faster than the rest of the segments. And if the government infrastructure demand were to roll out, then I believe that we will see cement demand going up, because infrastructure would require cement transportation, and if that happens, we'll again see tractor demand coming up. So we are readying ourselves to ensure that we meet the demand as it goes up, because we must remember that while all of this doom and gloom has been there, and that means there is a pent-up demand that will start to slowly come up.
And this is very helpful, your comments on it. But just to put in a, like you said, in a number context, a 10,000 production of BS6 vehicles. Just to put it, I'm sorry I'm asking a very short-term question, but you have been very helpful in terms of guiding it always on the demand side. On the production side, if you look at the quarter two, and I'm trying to gauge more of the industry production, so that's why you are the leader. If you look at from an August or a September going ahead in terms of production plan, you think we can, at least for the quarter two, we can go up to a production of at least a similar number of what the BS6 production you have done? I'm talking about around 8,000-10,000 production units. If something is possible, you see in Q2, given the supply chain, given the demand you see on the ground level, because that will take the industry to about 32,000 units.
You are asking whether we will produce, say, about 10,000 units of BS6 in quarter two, Ashok Leyland?
Yeah.
I believe so, of course.
Got it. This is helpful. I'll come back in the queue with more questions. Thank you.
Yeah. Thank you very much. The next question is from the line of Satyam Thakur from Credit Suisse. Please go ahead.
Hi, good morning, sir. Thanks for taking my question. So the first question that I have is on the cycle itself. In terms of the truck fleet capacity utilization in the country, what is your sense? Where are we now? And where does this need to go before we start seeing full new truck sales starting to happen?
Can you repeat your question?
Sorry,
Can you repeat your question?
Your voice is breaking.
Oh, I'm sorry. I hope it's better now. I'll try again.
Yeah.
What I'm saying is that in terms of the truck fleet capacity utilization in the country, what's your sense on where are we now, and where does it just need to go to before we start seeing meaningful new truck sales starting to happen? Like based on history, at what levels do we see that happening?
Yeah, at the moment, the fleet utilization levels are possibly slightly higher than 50-55%. I don't know the statistics fully because there's no data that is organized that we can say. It's a guess. We are going by the ground level thing. But I think, see, what happens in this business is, this is based on sentiment. Okay, so this is not like that cars, where that is people buy cars if they want to buy a car, if they want to change a car. And there it depends on disposable incomes and the sentiment on their earning capability. Here, the sentiment is on the demand and the traction that's happening on the industrial side, especially on the customer side. So I believe that if the economy were to open up and they see that there is more freight to be transported, more infrastructure projects coming in, demand coming in various end-user industry segments, right? Then you would actually see the demand for trucks going up. Because we must understand one thing. People have to ready themselves for growth. They are not going to just go and buy a truck at the last minute and try deploying it, because there is a lead time for getting a truck onto the board, and sometimes many of them, like oil companies for instance, would want their tenders to be participated in, when sometimes they even ask for the safety numbers. So I think a lot is got to do with the sentiments. If the economy were to open up, you will actually see the demand come. But am I saying that the demand is going to exceed last year? I don't believe so, because we started virtually no volumes. But do you see that ratably the fourth quarter could be a good quarter? I believe so. At this moment, I strongly believe that. That is how while I can't share information, let me tell you that we are looking at a fourth quarter performance, hopefully that will happen, which is going to be good by all standards. So it's not comparing yourself to first quarter. So we are really pushing ourselves that both Q3 and Q4, if the demand were to come in, how are we going to ensure that there is a good top line and bottom line performance?
Okay, thank you, sir. And the second question that we had was on the Leyland Finance side. What is the trajectory on the moratoriums versus where it was in the June quarter and where it is now in July, August? And so, the trend on moratoriums and on the collection efficiency, has that improved, and where are we on that now?
I think the Leyland Finance Management team has done an exceptional job. I must tell you that, while, there are some restrictions in sharing some information, I'll tell you that in terms of interest income, they have been almost at the same level as last year. And on the profit level also, I would say they are almost at, it's almost about, they are at about 85 to 90% of last year. So they have done a good job in terms of managing their profitability. And this is after, they are at about 85% of the ratio. The other thing I would say is that this is, after factoring in nearly 70 crore of exceptional charge, COVID-19 charge that was taken in March, they have taken an additional 15 crore this quarter as well, not because of anything else, because of conservatism. Their provisioning norms are as per, they have to follow Ind AS, so they have looked at expected credit loss models. As far as your moratorium is concerned, again, I would say that, they started in April with 75%. Today, the net moratorium, which means net of repayments, the moratorium rate is about 40%. So they are seeing a lot of traction in terms of payments. It is reasonably conservatively managed. So we don't see any issues there. The management is pretty confident. The portfolio is also pretty diverse. So you have a mix of, you have a very good mix. You've got heavy commercial vehicle, then you've got small commercial vehicle, three-wheelers, tractors, two-wheelers, used vehicle, loan against property, portfolio buyouts. Portfolio buyouts have been very exciting in their thing with absolutely no NPAs at all. So I would say that the company is in a very sound position. They are absolutely liquid. They have adequate and more than adequate lines of funding available with banks. And they have not sought, this company has not sought for any moratorium from banks, and they have been paying their dues on time. In fact, in certain cases where the debts are, the rate of debt is higher, they have actually prepaid debts and gone in for lower costing debt. So I think they are very finely positioned.
Thank you, sir. That's very helpful.
Thank you very much. The next question is from the line of Kapil Singh from Nomura. Please go ahead.
Yeah, hi, sir. Sir, can you talk about, you were talking about Avatar, can you talk about how we have done the pricing for the BS6 models in both LCVs and MHCVs, and does it protect your profitability on absolute basis or percentage basis? Any thoughts on that?
Well, let me give you an answer. We are trying to protect our profits on absolute basis and move it to the percentage basis, and that is the plan. Now, your question gave out the answer, Kapil, because the numbers are very low at the moment, right? So we are not really, there is no price discovery yet fully happening. The total industry volume itself was only 4,000 units. But what we are trying to do, as we have done in BS3 to BS4 and BS4 to BS6, is we are very clear about two things. We have to grow, and share of business is very, very important. It's very important for us. But at the same time, we will also ensure that the pricing is managed in an efficient manner to deliver better and better gross margins as we move forward. And there are two trajectories to this. It is not just the pricing trajectory. The first one is the pricing trajectory. The second one is the cost trajectory. So we are also looking at taking out costs out of the product. And when we do that, we are going to see that the impact of both improvement in pricing as well as reduction in cost will start improving cost.
And I was just trying to understand the price increase. How much is it currently? And we were also hearing that loan to values have come down. So if you can comment on that as well, please.
Yeah, I think LTV, that is a finance industry. So the LTVs have come down, and they're a little more stringent now because of the COVID situation. I think there's a lot of things that have to do with sentiment, right? So everybody is now a little careful in, I would say dispersing money and investing money. So the banks are doing the same thing. This will of course have, this of course has a certain amount of stretch on the customer side as far as CVs are concerned. But I'm sure that, things will start to ease out. See, ultimately, shall I tell you, if the demand were to come back and the fleet operator were to see that there is what should we say, there is the demand for freight, they will find ways and means to acquire commercial vehicles. They are not going to say, oh, I'm not going to acquire a commercial vehicle and lose business because the interest rate is high or because the loan to value is low or whatever like that. I think that all of this is going to be a lot to do with the sentiment.
Sir, can you repeat the pricing part? How much increase is there in percentage terms for MHCVs and LCVs?
See, that would depend on the model. For example, ICVs is different, LCVs would be different, but I would say that roughly there would be a 15 to 20% price increase that is required, and depending on the model. Yeah.
Okay, and this is same for LCVs as well, 15-20% increase?
I would say more 15%, 15, 18%, 15, 17%. Yeah, it's almost the same, about 15% in LCVs.
Okay. Thank you, sir.
Thank you very much. The next question is from the line of Prateek Poddar from Nippon India. Please go ahead.
Just two questions. One is, given the cost initiatives which we have taken in terms of K54 plus the new Avatar model, the new platform launch of Avatar, is it fair to say that even if you reach FY20 revenues whenever you reach them, your profitability versus FY20 will be much better than what we have seen in FY20 because of these costs?
Yeah, absolutely. We are looking at starting from now or starting from this year. I would even correct myself. Starting from last year when we actually started K54 again, the clear focus is on, I would say, 5 things. One is to grow our share of business in India very clearly, and that has to be done not through just in one track way. Continuously keep investing in the network and making the network also profitable. Second one is invest in products. And after that, ensure that we are collaborating, getting the whole ecosystem together, including financiers, dealers, customers, etc., and has key customer management. There's a lot of investment that's happening in how do I connect with the customer more immediately. And then the same thing happens to the supply chain. We forget about the demand side and the manufacturing side and the vendor side. A lot of integration happening there. So this is one. The second one is to grow the LCV business and ensure that we start launching new products which will help us to gain share, and that is what Phoenix is part strategy. And after that, Phoenix, we will have, just like Shark and Sharkflex, we will have Phoenix and possibly Phoenix Flex coming out as we move forward. The third one is we are at a low base in the international. That is a challenge and an opportunity. So we're looking at the opportunities front, and we would need to gain our overall share in the foreign market that we are aiming at. The fourth one is operational efficiency and cost, which means we are determined to see operating leverage as we move forward, which means for every rupee of revenue added, we are going to measure how much is getting into the bottom line and not just keep burdening our costs. The fifth one is, of course, grow all the adjacent businesses, which is our parts, very important for us. Then we have the engines business, which is also setting itself some huge targets in terms of their growth over the next 3 years. I can't share it with you, but it is quite, they set themselves some good targets. I have already talked about LCV. I've talked about international. The other one is defense. I think the recent announcement by the government of India is very, very positive for defense suppliers like us. Very clearly, the government is now focusing on not only make in India, but made by India. So that's going to help because then we are going to see that a lot of orders that are possibly going outside will come over here. We are not putting numbers yet because today we only have a feed. We see a direction, right? So we will know the distance soon when the government starts to, make those announcements. We've seen the recent orders that even HAL has got, right? Nearly 8,000 crores of orders have been given to HAL. So I'm sure the government is, focusing on how the private enterprise would also be, roped in for partnership in supporting India defense. And finally, I think the sixth one is in all of this strategy is driving digital analytics and improving productivity across the company and then connecting with the company. So I think there's a lot of work that's going on, including the customer solution systems where we are finding ways and means to innovatively touch the company. To answer your question, Prateek, why I wanted to give a slightly longer answer is then you get the whole feel of what the company is doing. Some of it is from the past. I know it's a repeat of the past, but a lot of it has got to do with how we are looking at this whole thing of managing cost and driving revenue. Because we are very clear about one thing. All of this boils down finally to our vision statement. We are very clear, we are very determined, we are very focused on becoming the top 10, being part of the top 10 club in global series. That's very sure.
Yeah. So that's fair to say, right, that you would get, even if we reach FY20 revenues, whenever we do that, the margins will be much higher, or because of these cost efficiencies which you are embarking on, margins will be much higher than what we have seen in the previous past, right?
Absolutely.
Okay. And so second question, very, very quickly on CAPEX, if you could just talk a bit about your plans for FY21 and 22. That's it. Thanks.
FY22, I will not be able to tell you now, but FY21, see, there is a certain amount of CAPEX which is already committed, right? So we possibly would see about 500-600 crores of CAPEX that will come out. But as the year goes on, okay, if we see that the demand is coming back, we may decide to have some small investments in CAPEX as well. But we will take it. See, we are going to, let me make this because I want all of you to be very note this down because each of you kind of perceive it in different ways. We will pay out the CAPEX rope as the year goes on. And if we find that there is a necessity and strategically important for us to make some balancing, and there are no major CAPEX. Our basic CAPEX is all over at this stage, which is our modularity, our BS6, and also the significant short of Phoenix. But there could be some, investment in a paint shop, or there could be investment in line balancing, or we may want to, have certain smaller variants of small investments for variants in Phoenix. All of that will start paying out as we move forward in the current year. But at the moment, I would say that if you are extremely tight with ourselves, we will have about 500 crores.
Okay, understood. Thank you so much, sir. Thanks and all the best.
Yeah, thank you.
Thank you. The next question is from the line of Pramod Amthe from CGS CIMB. Please go ahead.
Yeah, hi. Two questions. One, I think recently government was talking about some bus orders to be given out by the state governments. Any update on the same? When you expect that to flow through? Any talks with the Niti Aayog or on the?
So we are continuously on talks with various government agencies. The orders have not really come in, but once they start coming in, we will participate, and we are India's largest bus manufacturer in the world, number 3. So in all humility, hopefully we will also get a share of that.
But when would you peg a?
No, I don't know because you see, I'm optimistic. See, I'll tell you one thing, but soon we would see that transportation. See, why I'm telling this, a lot of this is not to do with any formal studies. It's about perception, right? It's perception. You take some calculated guess. On one side, let us be candid. The governments are challenged for funds. They are starved for funds because they've been fighting COVID. The revenues have come off very sharply, and tax revenues have come off. So they are grappling with how to keep people safe and how to put some money into the poor man's hands to keep the public at large safe and having some kind of livelihood. At the same time, they will have to take some steps in terms of ensuring safety in passage, and that will happen. That will happen only if you have more buses on the road, because I'm sure that social distancing norms will actually force transport undertakings to lessen the crowd in this entire piece. And if that happens, they will have to order more buses.
Our expectation is that there will be some tenders in the later part of Q2 and early part of Q3, and we will participate in that. But while I have a complete list of the various tenders, etc., the dates announcing and then getting deferred means that I don't want to state something which may get deferred by a bit.
Because looking at the current situation, that looks to be the easier one to be addressed than the other things which are.
No, but that the tenders have to be, the tenders have to be put in. And see, there are also other positives in terms of the government's view on China policy and, of course, their determination for safety. If that happens, then we will see the tenders coming out. Maybe the government will resort to borrowing from global agencies to fund this. And I'm sure global agencies also would want to kickstart economies across the world, because this has got a ripple effect, right? So you can't just kickstart only one or two economies. So they would possibly also want to invest in that. There could be partnerships with governments of other countries. I don't know. So, but we're looking at various options. But I believe that we will see these tenders coming up sometime in Q2 and Q3 as well.
Sure. And the second question is with regard to debt. I think compared to when we last discussed, there is a further 5% rise. Any major debt reduction plan in the short term and any year-end target you will be working with to reduce the net debt? Thanks.
Okay, I will just only give again a directional number. That is right. I mean, in March, our debt was much lower because that was in March. Then after that we have to feed April, May, June operations. So you have seen the net debt go up to 4,247. Predominantly, these have been used for payment of vendors, because we had sufficient supplies happening till March or first and second week of March, and so we have to pay off the vendors, and of course a certain amount of expenditure funding for April, May, and June. So we have done that. Now, as I move forward, perception, we continuously look at borrowing plans. The idea has been, the idea in the company, the strategy that we have adopted is very simple. We said we will take long-term loan, push all the repayments by a year or two, so that we ready ourselves for, fighting the short term if there are any challenges, which is exactly what has happened. And we keep our working capital limits as free as possible, so that if there is a dip that is required in working capital, we can do that. And I must appreciate our bankers have given excellent support. I think tremendous support has been given by the banking fraternity, highly engaged. They have personally, risked their health, and we have had consortium documents being signed in the thick of COVID. Can't imagine, so I will never forget it in my life. People really reaching out and helping, and things. It's been an amazing work that has been done. And as we move forward into the year, I am expecting the debt levels to come down. Now, how much is it? Let us wait for Q2 to end, and then I'll tell you. The reason is that let the projections start rolling out. Today I have only a kind of a feeling that things are going to improve. We have projections that show that. If I start sharing those numbers, they'll be looking pretty exciting. But I don't want to do anything of that sort. Rest assured on one thing: our projections internally tell us at the moment that if the COVID were not to get into another deep dive, and then there is another massive lockout and all that, if all of that does not happen, our debt levels will come off quite sharply by the end of the year.
Sure. Thanks and all the best.
Thank you.
Thank you very much. The next question is from the line of Sonal Gupta from UBS. Please go ahead.
Yeah, hi. Good morning, sir. Thanks for taking my question.
Hi, good morning.
Sir, a couple of questions. One, just on the implications. I mean, any thoughts on the new dimension norms for trucks that have been announced? So, what is the implication for the industry from that?
Which one, on dimensional cargo?
On the increase in the truck dimensions that the government has notified, right? Effectively the length of the truck and the width and height can be higher.
It is not going. No. That's what I said. That is for transport. Earlier there was this over-dimensional cargo, and this is for the supplies of you had it for scooter carriers and all that stuff. See, what is happening is we have studied it. At the moment, we don't see much of an impact, not because of anything else, because ultimately the number of layers and the height is a very important thing. So, and scooter carriers, car carriers are not, the major, I would say, needle mover in this segment. So at the moment, while we are looking at this and we are also discussing, I possibly will have a little more information to share as we move into second quarter, because those kind of vehicles are yet to be built in a full-fledged way. The demand has not yet come in. So let's look at that, and I'll come back to you on that. But I don't see any major impact. We'll be able to share a lot more in future.
Sure, sir. And just one question on the HLF side. I mean, like Hinduja Leyland Finance. How much capital have you invested? I mean, any additional what sort of capital requirement do you see there for this year?
No, we have not infused any capital directly into HLFL this year at all. So we will wait and watch. Like I mentioned to you, HLFL is looking at even various other options. We had mentioned this in March, April as well, and we are in discussions with other private equity players. So if we get a good deal, HLFL may lock in certain capital. If that does not happen, then we may have to infuse maybe, I don't know, 200 crores in Q3 and Q4. But we'll wait and watch. But believe me, if that capital is also infused, okay, like Ram said, let me tell you that capital will only multiply. So we are not too concerned about it, because HLFL is also it's got a housing finance subsidiary, I think, whose book is now more than 1,200 crores. I don't remember the exact number. And then we have other initiatives that have been taken by the company today. And I believe that the company is on a reasonably good trajectory in terms of diversification. But we have not invested any money directly into HLFL. At the beginning of the year, we had bought over the stake of Everstone for about 90 crores approximately. That's all. No further.
Right. And just lastly on...
Mr. Gupta, but may I please request you to return to the queue for your follow-up questions, as
Thank
we have
you.
several participants in the queue. Thank you very much. The next question is from the line of Priya Ranjan from Antique Limited. Please go ahead.
Yeah, hi Gopal. Thanks for taking my question. Hope all safe. Just on the modularity part. So, if on the modularity, do you see some kind of uptake in, say, fully built vehicles rather than, earlier, still the prevalent practice of, say, chassis kind of thing?
Yeah, I believe so. And that's the strategy of the company. Thank you for asking that, Priyanka. But before that, for the previous question, I had made a technical thing, so I just want to correct. The AUM of Hinduja Housing Finance as on June was about 1,760. But having said that, now let me come back to this. See, the basic idea of what we are trying to do is to see that we are also able to get a slice of the revenues on fully built vehicles. That's why if you look at our modularity and our avatar range of vehicles, as well as our ICV, we are focusing on fully built vehicles. In ICV, we have the E-Comet and, of course, Boss, which is a superior vehicle, which has started to gain traction because it's a really premium vehicle that we have in the sector. Nobody in comparison to what is offered in the market. The second thing is, as far as the heavy commercial vehicle is concerned, the entire cabs of all the vehicles have been completely changed, revamped, and because we're focusing on ensuring that we give a delivery of fully built vehicles and not just the what we call as the chassis or front end structure, the TSS it's called. Similarly, even in bus, what we're trying to do and not trying to do, we are doing now is coming with a completely standard but kind of modular structure, and also importantly a common fascia among the various types of buses. A lot of focus on Alvar, which is a bus body building plant. We are trying to make it more competitive. We are trying to see that customers buy a fully built vehicle from us instead of just a chassis and going out to other bodybuilders. This is a mix of both cost and, I would say, quality. So we want to offer superior quality and also have it at a price range which is attractive enough, because then what happens is you are able to get more of the value addition happening inside the plant itself. And the advantage that customers will have when they build a fully built vehicle from us is that the warranty is from front bumper to back bumper, no questions asked. Which means if somebody were to put in a outside fully built structure, there are always issues because the people who are building the structure may not be actually sticking on the standards. So customers are realizing that there's a big advantage. So we're changing the proposition to customers as well, and we are seeing value in it. Your question is absolutely right. We are trying to move it as much as possible into fully built structure, and modularity helps.
Yeah. And my second one is on the retail versus fleet owners. So as we understand, because of some issues initially in the driver side, driver availability, etc. So the retail guy has been performing little better than the fleet owners. So the financially, if you look at fleet owners may take slightly longer to come back rather than the 1 or 2 or 3, 4 vehicles, the retail owners. So any thought on that?
Well, we'll have to see. Again, I'll tell you, I'm not able to share any statistics because the sample size is very small. So, with these numbers, I can't really say, but fleet owners are waiting and watching, but fleet owners are also buying. It's not they stop buying, but what they are doing is they are buying vehicles and they're testing them out. And from our perspective, all I can share, at this moment, I'm sharing my perspective. Right? I can't give forward-looking statements, but the feeling that the large fleet operators have given us, the feedback that they have given us, has been extremely positive, both in terms of driver comfort and on efficiency. So we believe that the Avatar range is actually a big positive for you.
Mm-hmm. Okay, and lastly on this quarterly...
Sorry to interrupt, but maybe please request you to return to the queue. Thank you. The next question is from the line of Gaurav Khandelwal from Mirae Asset. Please go ahead.
Thank you, sir, for taking my question. Sir, just one question from my side to begin with. How much was creditors unwinding in the quarter that has happened?
I would say nearly about 1,400 crores or so. Balaji, would that number be right?
Yes. And ideally, this, as the production ramps up, let's say if we are expecting by Q4, if the production ramps up, this amount should reverse in the next 3 quarters. Ideally, this is the right way to look at it, right?
You're right.
So, but debt to that extent will also reduce by 1,400 crores.
Beg your pardon, please?
So debt to that extent, just because of creditor unwinding, will also reduce by 1,400 crores, right?
In fact, I'll just tell you, between March and June, the number, and this is only about trade creditors, it's not all the complex accounting that happens in terms of, other statutory creditors and all that. The absolute unwinding that has happened is something like about 1,700 crores.
Okay.
See, what happens is, as the production ramps up and you start importing material, your raw material gets offset with creditors, right? And then you start converting the whole trick is in converting your raw material into finished goods and then into a cash before you pay off the creditors. If you are able to do that, right? Then you become working capital negative. If you are not able to do that, you are working capital positive, and then you borrow from the bank to bridge the gap. That's about it. So over the past few years, we have been able to manage it well. Because why is it? It is not because we are super intelligent or anything of that sort. We have standard terms with creditors, but at the same time, when we were actually selling, we ensured that we were not offering too much credit to the dealerships, and we also ensured. But the other thing is, when credit is not being offered, we also were not pumping the dealerships with inventory. That is why when we moved from BS4 to BS6, we didn't have a major impact because our dealerships were not stuck with BS4 inventory. That is very important. So this whole thing is a lot more, I would say, wholesome and complex when you look at it. How do you ensure that the dealer gets the right thing? It's because you don't push. He gets to buy the vehicle off stock. We do offer a little bit of credit off and on to dealers, but it's very small, hardly 7 days, 6 days, sometimes on and one-off days.
Okay. And sir, any movement in ICD account during the quarter?
Yeah, it is actually a favorable moment. I told you this is more, what we're doing is we pocket with group companies because there is a surplus. Like I told you, as on June, I have, debt. additional 1,000 crores which I keep parking in fixed deposits, etc. So the ICDs actually have come off from 500 crores. They are now, as I speak to you. In fact, yesterday or day before there was a repayment of 100 crores. So we are at 400 crores.
So the ICD on a Q1 in the quarter has reduced by 600 crores. I mean, from 1,000 odd crores to...
No. ICD, let me repeat. ICD as of March was 500 crores.
Okay.
As I speak to you today, the ICD is 400 crores in August.
Okay.
So the ICD has come down from 500 to 400 crores. What I mentioned about surplus was, I anyway have surplus. That is, when I borrow from bank, I need to have some surplus in the company to manage liquidity, right? That number is approximately 1,000 crores, and I have deployed it into tax deposits, overnight mutual funds, and I am also now, this ICD is a strategy to reduce your overall negative carry, and which will have a favorable impact on the company in terms of the cost. So our ICD has come down from 500 crores to 400 crores. In August, there has been a repayment of 100 crores, and now the ICD is down by 100 crores. Are you clear?
Yeah. That's helpful, sir. And sir, just last...
Gaurav, one thing, Gaurav, you said on the creditors unwinding 1,400 crores. It is not 1,400 crores, it is 1,200 crores. Okay. What Gopal said was 1,200 crores, which is correct.
Okay. And sir, just last question from my side.
Sorry to interrupt, but may we please request you to return to the queue for your follow-up, please, as we have several participants waiting in the queue for their turn.
Okay.
Thank you. The next question is from the line of Gunjan Prithyani from JP Morgan. Please go ahead.
Yeah, hi. Thanks for taking my question. I just had two follow-ups, sir. If you can just clarify on this Leyland Finance, which you mentioned that incrementally there has been no commitment, but this Everstone stake conclusion has happened in this quarter?
Yeah, it was in April, no? We announced it.
Yeah, so that transaction is fully complete, right?
Yes.
Okay, got it. Now, secondly, on the for this quarter, I'm just trying to understand this gross margin change that has come so full quarter on quarter. Is there, you can share how much was the spares revenue, or there is a mix change that we should be, looking at in terms of modeling the rest of the year? Because it just seems a very steep move on the margins at the gross margin level.
So can you tell me what working you have got, so that then I'll make the answer accordingly? Because when you say gross margin, what are you referring to? What is it?
So I'm just looking at the RM to sales ratio. Of course, this is a slightly, ad hoc quarter to look at, but I'm just wondering if we project out RM to sales versus the Q4 exit of last year, how should we be thinking about it? Because there is BS6, of course, which may not be incrementally, additive on the gross margin. You see some impact of that in terms of gross margins coming down. So any insights you can give in understanding how should we project this gross margin?
I think what is happening is the percentage of revenue of spares and some of the other businesses, non-MSCV businesses, have been higher, due to which the RM to sales ratio has not been really significantly impacted. As we move forward, you would actually see a slight pressure on it, maybe in Q3, but then you'll see the recovery also happening, because, as I told you, there is a cadence of price recovery that we have built into our projections, and there is a cadence of cost reduction also having built into the projections. So the basic idea is that by end of the year, we should have certain amount of normalized, improvement into the raw material sales as far as MSCV is concerned. LCV should also see the same traction. Because see, at the moment, this is a quarter where there's a very small amount of vehicles sold. So, you're acquiring customers and asking, then after that, they are trying out the vehicles, so the price discovery has not happened fully. But I would still say that our price recovery has been much, much better than competition.
Okay. But it's not in entirety.
Beg your pardon, please?
There is still some cost absorption which has happened.
Yeah, there is an upside to the margins that will happen, but you are only looking at it as an average. That average contains truck, bus, LCV, exports, defense, aftermarket, right? Now,
yes.
And engines, power solutions. So the mix has changed because the mix of the non-MSCV business is higher in the current quarter. Because like I mentioned to you, the aftermarket and spares revenues have been much better.
So can you share the mix or the revenue? Just gives us a better perspective. If you can share spares revenue and the non-CV business revenue.
Yeah, I can. Balaji, can you just share the CV and the non-CV revenue?
Yeah, spares is roughly 25%, and defense is roughly.
Let me put it this way: the truck and bus revenues are about 20%, and LCV is about another 21%. The rest is the other business.
Yeah, 40-60.
Okay, got it. And just last question on this, just very quick, on the LCV expansion, is there a timeline that you've shared? If I missed it, when do we see that portfolio being rolled out?
No, this was actually, we wanted to inaugurate it much earlier, but COVID came in and there was a complete lockdown. So the vehicle, everything there is no delay in the real sense of some. It's not a project management issue. The project has been managed very, very efficiently. Actually, no other company would have actually been able to produce an entire vehicle in such a short while. It has, I think, less than 2 years. But we are waiting for COVID to unwind a bit. And as I mentioned earlier in the call, we would want to launch this vehicle over the next possibly 60 days or a little more than that. That's all.
Thank you so much.
Thank you. Ladies and gentlemen, we will take our last two questions for today now. The next question is from the line of Amin Pirani from CLSA. Please go ahead.
Yes, hi sir. Thanks for the opportunity. I think my first question was, I think I missed something. You said capex of around 500 to 600 crores possibly for this year. And any amount that you have budgeted for investments like HLFL and otherwise, other subsidiaries for this year?
See, HLFL at the moment I am not able to comment. We will have to wait and watch. We will pay out the rope as and when it's required. As far as investments in other subsidiaries are concerned, I would say that we may require another 150 to 170 crores, predominantly in Optare and Albaner.
Okay. Understood. And sir, my other question was, slightly, taking a step back. We had the axle load norm changes around 2 years ago. Then FY20 was a very volatile year because of BS6 expectation and everything. Now, as we look forward, now that BS6 pricing is known, and there has been do you expect any significant changes in the mix or buying behavior now that everything is settling down and we will have a new cycle, or you feel it will be, as it has been in the past?
No, I think there are 2-3 things that's going to happen. I think that we would see, one is trajectory. On the trajectory front, if I were to look at it, I think things will start moving up because we are possibly at the bottom. Right? Now, the bottom is a revised new bottom because the bottom is significantly lower than any bottom that has been felt. Right? So, I think this is one, purely from the industry perspective. CIV is very low, CIV has been low. The second thing that is going to improve the trajectory is the economy, and the world economy is also at a bottom. Right? So, we are going to see things moving upwards as they move forward. What is the slope? I don't know. Because is it going to be sharp? Is it going to be a gradient? We'll have to see. But definitely, I think things will start to improve. Right? You can't continue like this. So we actually then will see a positive pressure on volume in domestic. As far as Leyland is concerned, so if the domestic industry were to do well, has to recover well, we're very confident we're going to do better than the rest because we've got the right products, superior products, and also we are getting larger range of products today with MVP and the modular vehicle program in MHCV. That means it gives me greater number of offerings to the customer. The second one is in LCV, I'm expanding the portfolio. And of course, in engines business also, they have some, I would say targets. So you're going to see that we are going to be able to kind of exploit this growth, if I may use the term, in a better manner than we were able to do in the past. As far as growth of Leyland itself is concerned, I believe that when the international market expands, we again will see a much larger trajectory happening there because of the fact that we are in a bottom. And secondly, we are also expanding that because we have better range of products available in the market. and we have a completely different international strategy. The third one is in terms of cost management, which I did mention about, is that we are looking at cost completely differently, and we will, like Pratik mentioned, are we going to see benefits of operating leverage? I believe we're going to see the benefits of operating leverage. And of course, initiatives like digital and analytics, plus new businesses which are happening now, like customer solutions, would actually improve the traction much further.
So that is helpful. So actually, what I wanted to understand was, that will the mix in terms of tonnage of vehicles change materially going forward compared to the last upcycle that we saw, which was driven by these 30, 35, 40 ton vehicles where you are, significantly